If you are struggling to grow your credit and you think a credit builder is a magic fix, think again. Credit builders can be helpful for some, but they are not a cure-all. In today's video, I'm going to explain why credit builders might not be the solution for you and what you can do instead to truly fix your credit. This is coming from someone who has helped many people repair their credit and significantly improve their scores. If you stick to the end, I'll give you a free bonus to help you with your credit journey. So first off, let's go over what credit builders are. It sounds simple, but essentially these are credit products often offered by financial tech companies that help you build credit. Credit builders, they're nothing new. They've been around for quite some time. However, there's been more players in the game recently, making the industry a little bit more interesting. One of the earliest credit builders out there has been secure credit cards. Many major banks, they offer these, and how they work is by placing a security deposit, usually anywhere between $200 to $1,000, which acts like a credit limit. In exchange, you get a card that you can use like a traditional credit card. This helps you build an additional credit account or trade line on your credit profile, and as you spend and pay it off, it positively affects your credit. Some of these secure credit cards may require an annual fee, so they can be somewhat predatory towards those with less than perfect credit. But on the bright side, there are secure cards that graduate to an unsecured credit card. So what this means is that once you've proven credit responsibility, usually anywhere between 6 months to a year, they will typically increase your credit limit, making your secure credit card partially secured, or they just may return your security deposit and offer you a traditional unsecured credit card. This means that they will give you a credit limit that you can use and just pay back. Secure cards are counted as revolving lines of credit, meaning that these types of credit products change on a monthly basis. These are usually higher risk products for lenders, which is why when you leave balances on your credit cards, they tend to affect your credit score much more compared to loans. Speaking of loans, the second type of credit builders that have been around for quite some time are credit builder loans. These are also known as share secure loans or even pledge loans, as some credit unions call them. You are essentially loaning yourself your own money, and once you pay off the terms, this builds your credit. Let's say that you want to do a $1,000 credit builder loan. You would go to your bank or credit union, and then they would lock away this $1,000. They would then come up with your payment plan based on your terms, usually about a year or so, and then they would charge you a little bit of interest on top of your payment. You would either slowly get that principal back or just get $1,000 back at the very end. After a year, you built a positive payment history, so you're just essentially paying the bank a little bit of interest so you can manufacture your credit. There are certain companies and banks that allow you to do this without any interest, but reporting to the credit bureaus costs money, so there's usually some sort of fee associated with this. Now, in recent years, there have been numerous credit builder companies such as Kickoff, Self, Extra, Credit Strong, Kovo, and many more just to make the credit building process much easier. They typically offer something similar to a credit builder loan or a revolving line of credit. There's usually a catch with the revolving lines of credit, like you can only purchase items through the company's store. Or they treat a debit card similar to a credit card, where you can use a debit card that's linked to your checking account, and then they would just cover the charge and then pay themselves back the next day. There is some financial wizardry that's going on here, but it works out fine because they make money and you get to build your credit. The type of people who are gonna see the most impact from these credit builders, whether from a traditional lender or these newer financial tech companies, are gonna be those who are new to credit or have a very thin credit profile. When I talk about people who are new to credit, I mean those who may not have ever had a credit card or a loan on their credit profile. If you have a thin credit profile, this means that you may only have one credit card, maybe one loan, or just either one of those. By diversifying your accounts and adding more positive information to your credit profile, this can strengthen your credit profile and increase your credit score. Now, there are some limitations to these credit builders, so let's go over 3 of them. So first, if you had bad credit due to delinquencies, if your credit score is below 680 or even below 600, you may have multiple delinquencies such as collections, charge-offs, or late payments, and these can overshadow the benefits of credit builders. If you had a late payment within the past 1 or 2 years, the main reason why your credit score is low is due to this and not because of you having a thin credit profile. Adding credit builders will most likely not do anything to improve your credit score. The only way to increase your credit score in this situation is either to let this account age or remove it through credit repair. The same goes for collections or charge-off accounts. The quickest way to remove these are typically through credit repair or pay for delete. Essentially, a pay for delete is when you negotiate with the debt collection agency or the original creditor saying that, hey, I have XYZ amount of money and I'm willing to pay this off in full if you can remove this off of my credit report. Plenty of debt collection agencies have done this in the past because they bought the debt for pennies on the dollar, so whatever money that you pay them is usually profit for them. Just by having these negative accounts on your credit profile really hinder the effects of credit builders. Next, let's talk about another type of credit profile that credit builders may not be helpful for, which are individuals with age accounts or age credit profiles. If you are a person who has built credit for the past 3 to 5 years, credit builders may not be it for you unless your profile is thin. What I mean by this, let's just say that you have 1 or 2 credit cards for the past 3 years. That alone is probably enough for you to get a pretty decent credit score. But if you never had a loan before, meaning you never had a student loan, auto loan, or even a mortgage, getting a credit builder loan will help that portion of your credit score. However, it is very unlikely nowadays for a person in their 20s to never had a loan before. Student loans are one of the most common installment lines of credit that anyone has, and the second is probably an auto loan. Mortgages are becoming more and more rare on people's credit profiles, so if you never had a loan before, or if you had a loan but is not currently active, then a credit builder loan can be beneficial to your credit score. So to elaborate on this just a little bit more, like if you had an auto loan or a student loan that has been paid off and there are no longer any active installment loans on your credit, then a credit builder loan would be beneficial to you in this sense. The same goes for individuals who had credit cards before. This may be a starter or student credit card that you had from a bank or credit union. If you had one of these before, then there's really no point in getting a revolving line of credit builder because you already have one of these and it is currently active. So this would kind of defeat the purpose of getting a credit builder and you would just be wasting your money. The third reason on why credit builder loans may not be worth it for you is if you have current credit card debt. The amounts owed portion of your FICO score takes up 30% of your overall score. This is the second biggest determining factor of your credit score. So if you have high credit card debt or high credit utilization, this is going to hinder the effects of credit builders. Additionally, those who have new installment lines of credit, such as auto loans, will also see limited benefits from credit builder loans since the existing balance is so close to the opening balance. So if you have a lot of debt, then it's better to take care of those first before adding more trade lines to your account. Now on the flip side, let's talk about 3 alternatives to credit builders that can build your credit score much more. So if debt is the biggest issue when it comes to your credit, then you may want to consider a debt consolidation loan. Given that your credit score is on the lower end due to high debt and delinquencies, it can be a little bit more difficult to get approved. However, there are companies out there that may help you consolidate all of your credit card debt into one payment, saving you money on interest. Plus, this type of debt will be reported differently on your credit profile. Debt consolidation loans work by essentially refinancing all of your credit card debt into one loan. Normally, credit cards have interest rates ranging anywhere between 15% to even 39%. If you were to put this into a debt consolidation loan, your interest rate can range anywhere between 10 to maybe even 15% depending on your credit. That's a huge savings. In addition, since this is a loan, it affects your credit much differently. Credit card debt generally has a higher impact on your credit score since it is revolving and constantly changing, making it consider higher risks. If you have a constant payment every single month, like with a personal loan, these tend to affect your credit score much less compared to credit card debt. Now, there are some pros and cons to debt consolidation. So some of the pros are the costs, the simplicity of one payment, and it can improve your credit score. Now, here are some cons. There may be some upfront costs. Depending on your credit, you may not qualify for a consolidation loan, and it may take some time for you to see the credit benefits. Since you are adding a new account to your credit profile, this can bring down your average age of accounts. Another alternative is that if you have any type of derogatory or negative accounts on your credit profile, rather than adding more trade lines or credit builders to your account hoping to improve your credit score, you should really focus on repairing your credit. I have done many videos on this topic throughout this channel, so you can just search through my videos to see what applies to you. I also have a DIY credit repair software called Credit Rehab Pro, which will make your credit repair much easier if you don't want to pay the prices that credit repair agencies charge. If you want to find out more, link will be down in the description. I also have a free community on School where I provide templates and courses to help you get the ball rolling on credit repair. So if you want to check it out, again, the link is down in the description. The main reason why I would consider doing credit repair is that no matter how many trade lines or credit builders that you add to your account, having negative information on your credit profile will hinder the effects of these credit builders. So rather than paying money every single month to have these accounts reported to the credit bureaus, use that money towards credit repair or try to figure out how to do it yourself, which can be free. So on the topic of free options, there are plenty of trade lines and other credit builder accounts out there that are free that you should take advantage of first before you start paying for these accounts. Of course, there's going to be some limitation to these, mainly because they may not report to all of the credit bureaus. So one free trade line or credit builder account is Experian Boost. I believe anybody who has a thin credit profile should be using this. So the way this works is by Experian requiring you to add a bank account that you use to pay your bills. They would then detect bills with on-time payments and add them to your credit profile. The results are pretty much instant, and there's really no downside to this. The only thing to note is that this is only beneficial to Experian, and the other two credit bureaus are left out. However, Experian is probably the most important credit bureau since many major lenders tend to pull Experian. Another company that offers a free option is Grow Credit. This app helps you build credit through monthly subscriptions that you already pay for, like Spotify and Netflix. Their free membership has a monthly limit of $17, which is probably good for 1 or 2 subscriptions, but the best part is that it reports to all 3 of the credit bureaus. And lastly, the best option is secure credit cards. Ideally, you want to find one that graduates, like the Discover It Secured, Bank of America Secure Card, or the N Rewards Secure Card from Navy Federal. All of these have a graduation process. There will be some upfront costs in the form of a security deposit, but once your account gets upgraded, you'll get that money back, so your net cost will be zero. So here are some real life examples of taking this advice into action. So one of my community members have gone through bankruptcy years ago and was in the process of trying to clean up and rebuild her credit. So she had an auto loan with some late payments, and during the dispute process, the trade line actually got removed from Experian, causing her FICO score that was in the 600s to around 400s. So following my guidance, she added Stellify and Kovo, and in less than 30 days, her Experian score went up to 667. This is a prime example of when credit builders would work. This worked especially well because she had a thin credit profile. The thing is that credit builders can work extremely well with those in similar situations. However, for those who's been in the credit game for quite some time, having multiple different types of accounts, these may not be giving you the outcomes that you are looking for. So check out these videos over here to help you repair your credit before considering credit builders.